Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton. Every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Well, coming up, an election date, we think, definitely a budget date, and a resignation as Julia Banks joins the crossbench, all in a day's work for the Ivory Tower of Canberra. We cross live for the latest analysis with Annalise Nielsen from Canberra. Australia's youngest airport and the jewel in the crown for the Wagner family, Wellcamp in Toowoomba. Sara, Hales, General Manager of Wellcamp, unpacks the business of freight, passengers and that big new piece of business from Qantas, the Pilot Training Academy. And Pottinger co-chair Nigel Lake from New York drops in from America to give us his take on the year and a look forward to that G20 meeting. And of course, we've got the Royal Commission coming up too. But a fair bit going on in the global auto industry, from chiefs being toppled on corruption charges to big job losses looming in the car industry in all places, America. Well, let's start there. Yesterday came the shock news for North American car workers. General Motors is to lay off 14,000 factory and white-collar workers, with 5 plants up for possible closure as it restructures to cut costs and focus more on autonomous and electric vehicles. Apparently, that includes assembly plants in Detroit, Ohio and Ontario. About 6,000 factory workers and over 8,000 white-collar workers will be affected. Well, as you can imagine, that hasn't gone down well at all with the man who's making America great again, especially given the stick and carrot strategy he's had to keep car makers, including tax cuts in America.
Well, we don't like it. I believe they'll be opening up something else, and I was very tough. I spoke with her when I heard they were closing, and I said, you know, this country's done a lot for General Motors. You better get back in there soon. That's Ohio, and you better get back in there soon. So we have a lot of pressure on them. You have senators, you have a lot of other people, a lot of pressure. They say the Chevy Cruze is not selling well. I say, well, then get a car that is selling well and put it back in. So I think you're going to see something else happen there, but I'm not happy about it. Their car is not selling well, so they'll put something else. I have no doubt that in a not too distant future, they'll put something else. They better put something else in.
It's a good rant, isn't it? Well, in another part of the world, Japan, the extraordinary ousting of the man who has until last week been the standout leader in the global car industry, the now former Nissan chairman, Carlos Ghosn. Now, 2 weeks ago, he was arrested on suspicion of underreporting his income quite substantially. Until that shock announcement, the world knew him as the man who took a mid-sized regional European Renault and transformed it into a hugely profitable global auto group with 40% plus shareholding in Nissan and Mitsubishi, and which in 2018, I think that whole group produced 10.5 million cars. That's more than any other group.
As a chairman, Ghosn helped with the revival of Mitsubishi. The results speak for themselves and explain the role he had with this company.
OK, well, now there are plenty of conspiracy theories doing the rounds here at the moment about Ghosn's downfall, most of them suggesting it was some sort of internal coup at Nissan Renault. According to a very well-placed source of ours, Chairman Ghosn has been pushing his CEO, Saikawa, to do exactly what GM has done this week in the US and close some plants to get ahead of the game, as the markets in both China and the US have gotten softer in recent months, and that Nissan's profits have in fact collapsed for 2018-19. Now, this story has a long way to run. Some of the issues are, what exactly is the misappropriation of funds that Carlos Ghosn is being accused of? A report in the Japan Times yesterday suggests he may be the victim of Japan's new plea bargaining laws based on slightly murky evidence, accused on slightly murky evidence, and that the funds were due to him perhaps anyway on departure. Now, no doubt the lifestyle of the global head of Nissan was luxurious, but as I say, let's see how the story plays out, shall we? All right, well, we'll kick off with another gruelling day at the Royal Commission, more so for some than others, starting with the chair of the National Australia Bank and former head of Treasury, Ken Henry, continuing from yesterday. But fair to say things got a bit more testy than yesterday, I think. And then on to AMP and Acting Chief Executive and board member Mike Wilkins. Mr Wilkins was brought in after Craig Meller's departure as an interim CEO. As I said before, Francesco de Ferraro, the new chief, starts in the next few weeks. Well, down there again all day and listening in, chief reporter Leo Shanahan. Leo, take us through the day.
Yeah, it was another pretty fascinating day, Ticky. No quarter given, no quarter gained really by Ken Henry and Rowena Royal Council assisting. I remarked yesterday that Mr Hayne might want to watch his style, watch his tone perhaps in dealing with Rowena Royal. Well, he didn't really change, but she didn't either. And it was early on, I suppose it was characterised by these clashes between the two in over Mr Henry's role in the fee for no service scandal that is looking like it'll cost the bank about $100 million in total. And Rowena Royal really pushed him on his awareness of what was going on in the fees for no service scandal on a board level and why more wasn't done sooner. Let's not forget, Mr Henry's actually been on the NAB board since 2011.
Yes, since he left Treasury.
He became chair at the end of 2016. So he's been in there a while, and the scandal was really brewing, and the board was well and truly aware of this for a couple of years and did, he said, wanted a resolution. But look, listen to this early exchange between Mr Henry and Rowena Royal. I think gives you a sense of how much of the morning was.
I have asked myself the question, and the board has discussed this on a number of occasions. What should we have done differently? We all agree we should have done something differently. Honestly, I'm not sure exactly what and when. My feeling is, though, like I wish that we had said to management, well, certainly 2 years ago, perhaps even earlier, that we had said enough is enough. Forget about negotiating with ASIC, just do it. Now, the risk with that...
Do what before you continue, Dr Henry?
Remediate customers.
Thank you.
Remediate customers.
So I think you get a sense of the attitude there from Ken Henry. He wasn't unrepentant, but he certainly wasn't overly submissive, you might say, to the Commission. They did extract from him a sense of regret over how the fees for no service scandal was handled, and he did admit that it had caused serious reputational damage to the bank. Have a listen to this.
Surely someone within your business at this point was thinking about whether this conduct contravened the law, and if so, how it contravened the law.
Yes.
And surely those were matters that the Chief Risk Officer should have reported to the Risk Committee.
Perhaps.
Back to where we started, perhaps,
yes, perhaps.
Dr Henry. And I'm afraid I still don't understand the reason for your hesitation.
No, I probably can't explain it to you.
And after Mr Henry left the stand, we've now got Mike Wilkins on the stand, the AMP interim chief executive, as you say, Ticky. Now, he was asked once again also primarily about this fees for no service scandal, which he's revealed has now blown out in costs for the AMP over the next 3 years to $778 million.
Wow.
It also showed to me that the policies and procedures that we had put in place and the knowledge that people inside the advice business had was effective and was working. The fact that people were prepared to call that issue out.
I see. Now, as at June 2018, Deloitte was still undertaking work to unequivocally confirm whether there are any further instances of fees charged for no service to customers in the bowler and licensee orphan pools due to administrative errors.
I'm not aware of the date of that. I'm not aware of that that situation in 2018.
Oh, you're not aware of work? I'm not saying that it is continuing. I'm just saying you're still doing work, or in the middle of the year you were still doing work to confirm that it had been turned off.
I'm not aware of that, Mr. Hodge.
Leo, just give us a sense, will you, as far as AMP is concerned, has Mike Wilkins finished? Are we going to be expecting to hear from anyone like David Murray? And how much will the Commission be looking and drilling into AMP again?
Yeah, look, I think Mike Wilkins will be done pretty early tomorrow. I think what this has cost AMP is pretty self-evident. It's cost them a chief executive and a chairman. We're actually just waiting the departure of Mr. Wilkins over my shoulder. But as we've said, that cost blowout to $778 million. He also revealed this afternoon that they're very closely watching their corporate super program, their corporate super employee program, because they're concerned there that another fee-for-no-service scandal could be brewing. He was directly asked by Mr. Hodge whether that was concerned, and he said yes. So they're urgently reviewing that program now as well. So Francesco Di Ferrara will have a fair bit on his plate when he starts in a couple of days, needless to say.
Right, Leo Shanahan, he sure will. Thank you so much for bringing us up to date on quite a day. Thanks a lot. Well, quite a day too in Canberra in an effort to get back on the front foot after the horror of the Victorian landslide. Now, the Prime Minister, Scott Morrison, and Treasurer Josh Frydenberg were oozing confidence today with big news, a promise of a return to surplus for the first time in a decade. Remember, we were talking to Deloitte earlier, Chris Richardson earlier in the week, and also an announcement to deliver the first federal budget on April the 2nd. Well, it couldn't be the first, could it? All but locking in an election for either May the 11th or May the 18th. But in a fit of political irony, really, at the same time, one of Mr Morrison's crucial MPs was taking to her feet in Parliament and jumping ship. Julia Banks defecting to the crossbench, pushing the government even further into minority at 74 seats. Well, let's go live now to the ground in Canberra, where Sky News political reporter Annalise Nielsen is standing by. No one was expecting this today, were they?
Absolutely not. We were all scraping our jaws off the floor when we saw this, and in one way it wasn't actually unexpected. We were hearing rumours that Julia Banks might be moving to the crossbench around the time of the leadership spill, but that very much seemed to have died off, and then today it was right back in front and centre, and it really was taking everyone by surprise, and it seems no one more so than the Prime Minister when she stood up. We understand that there was a coalition party room meeting this morning where they were discussing their legislative agenda. We understand Ms Banks didn't attend, and she didn't notify anyone in the party room that she was going to make this move. So it really was quite extraordinary when she stood up, and she had some very direct words for her former Liberal colleagues, rather. Let's have a look at what she had to say.
The Liberal Party has changed, largely due to the actions of the reactionary and regressive right wing who talk about and talk to themselves rather than listening to the people.
So she certainly wasn't mincing her words there.
No.
She's one of a number of Liberals in Victoria who seem very concerned about the Victorian state election and the result there, and it was obvious that it had become time for her to move.
Right, OK. And so what news, I mean, now, what was the response of the government today?
Well, we didn't really hear much from the government after that. They'd had their doorstop, and then they were moving on into Parliament they obviously had quite a few questions thrown at them from Labor about this, but we're not expecting to hear much more, absolutely, from the government today. I think they're in damage control, but now they do at least still have government. They do still have they are governing, even though they don't have the majority on the floor. She has guaranteed that she won't block supply, so now it's just that much harder for them to push through any legislation before this election, which we now know will be, as you say, around sometime like May next year.
But presumably much tougher to govern between now and then. Now, what did the Prime Minister have to say about the budget and the election?
Well, he was very confident this morning. He was saying that he's going to deliver a budget that's going to have a surplus and a lot of sweetness for Australians. And so we're very much feeling that it was election mode for the government. Even though they are indicating it will be May next year, they wanted to say that they had this plan, and it really is quite an extraordinary claim to say that it will be in surplus, but that's exactly what the Prime Minister was saying just a bit earlier today. This is what he had to say.
Labor's policy on taxes is let it rip. Let the taxes rip on every single taxpayer, every single business, every single saver, every single retiree. They will let taxes rip.
So, Ticky, those are some fighting words there from the Prime Minister.
Right, right. And presumably, you know, when it comes to budget, we've got MyEFO coming up, do we? And it's right, as I gather, the date of MyEFO is right in the middle of the ALP conference. Well, when I last spoke to Chris Bowen, the Shadow Treasurer, he said, that's exactly where they're going to put it, and I'll be standing there and happy to talk from the ALP conference floor.
Absolutely, you're right. It's December 17. The ALP conference starts in Adelaide on December 16 on the Sunday, so they really were trying to take the momentum away from them. I think the Liberal Party really is concerned that all the focus on them has seemed to be about leadership and internal politics. We understand in that meeting this morning, again among the coalition MPs, the Prime Minister was really pushing, saying now is the time that everyone needs to be showing a united front. He said to Liberal MPs that when it comes to an election, they will win on policy. It's the internal turmoil that would let them down, and so that was the very clear message. That was also right before Julia Banks' announcement, so it would be interesting to hear what their meeting would have been like once that had been made.
Indeed, fly on the wall. Right, Annalise Nielsen, thanks for all of that. A very busy day. Well, let's head to Victoria, which is, of course, where that landslide victory that shocked everybody last weekend happened. Well, Premier Daniel Andrews has announced a new-look cabinet following his sweeping victory in the state election. And for the first time in the state's history, the cabinet is made up of 50% men and 50% women. Daniel Andrews says the decision to have an even representation of his women in his cabinet was made to effectively serve the interests of Victorian women.
When we've talked about gender equity, when we've talked about better attitudes towards women leading to better outcomes for women, we have meant it every single time. This was my preference, and I'm very pleased that my colleagues have agreed to what I think is a fantastic slate of candidates, a fantastic new ministry for a new government.
The ladies and gents will be officially sworn in later this week. Well, after the break, we'll get a flight check with Wellcamp General Manager Sara Hales.
You're watching Ticky on Your Money. Now, back to Ticky.
Yes, welcome back. Well, Australia's youngest airport, which we've been following almost since it started, continues to kick goals. Wellcamp Airport in Toowoomba, owned by the Wagner family. Now, this year, it sees growth for passengers with the launch of a new brand campaign and, very importantly, of course, the freight side, where the pipeline apparently looks pretty good. There's also the new Qantas Pilot Training Academy, which will be good for business for the airport. Well, the woman who's been driving the development is General Manager Sara Hales. Sara, great to have you in Sydney again.
Thank you. It's fantastic to be here.
So you're down here, what, I guess talking to Qantas about the Pilot Academy?
Well, I am here to see Qantas, my #1 client, and our foundation airline customer. So we maintain a really close relationship.
That must have been a really big deal, because that was quite competitive, that Pilot Academy. So how was it when you got the news?
Well, it was fantastic. You know, what a massive opportunity for our airport and for our town and for our region. It really just goes to show what can be achieved when an organisation like Qantas and private industry like Wagner Corporation and Wellcamp Airport and the Queensland Government work closely together to get a great outcome for the community.
So what does it mean for you in terms of the build and the business?
Well, we've got a whole team managing the actual build, which is really great because I need to focus on the airport itself. But what it means for the airport and the business park that we have around the airport is it really starts to position us as a centre for excellence in aviation training globally. Across the world.
Particularly around Asia.
Yeah, particularly around Asia, and
Yeah.
Australia's really well placed to compete in that space. We need 790,000 new pilots globally in the next 20 years, and really when you think about it, that's just the tip of the iceberg, because the industry needs ground handlers and engineering staff, so there's a big opportunity there, and this is just the start of it for our region.
Just pull me back for a moment, because investors might be a little bit confused. There is the listed company.
Yes, that's correct. Yep.
Wagner's,
yep.
Right, and then there's Wagner's Group, which was the quite substantial bit of the business that the Wagner family has kept, including the airport.
Correct. Yeah. So the Wagner Corporation is the family-owned part of the business, and that owns Wellcamp Airport.
All right. Take me through the business in itself, the airport. Are we now in the black?
We are, yeah, we are in the black. So we've been profitable probably for about 3.5 years now. And we have a very different business structure to what most airports have. We operate the ground handling and security screening services, refueling, and a range of other services at the airport. And it's because of that breadth to our business that we've actually been able to achieve an in the black position pretty early in our life.
You think that's key, do you?
Absolutely, absolutely.
So you've had this massive growth over the last couple of years, particularly on the freight side. And presumably recent months there's been a challenge of just consolidating it all, has there?
Yeah, absolutely. I guess when you build an airport really, really quickly and you have an enormous amount of growth, there's a lot of work to do behind the scenes in making sure that you've got strong and robust systems and a really good and stable leadership team in the business. And I think, right now at the end of this year, we've got there, and I'm really pleased with it. And I think next year's going to be a very exciting year for us. I think we're in a good position.
Okay, you've got on the freight side. I mean, that's been such an important part. You've grown that pretty much from the ground up when you first arrived, didn't you? But I'm just looking at all these political developments in the South Pacific, knowing that a lot of your freight is the heavy machinery. It's not just
big
food.
That's
I mean, presumably there'll be some interest on the defence side as well.
Yeah, I think so, and I think there's some really promising developments in the defence supply chain at the moment, with the Australian Defence Force and the Australian Government committing a significant amount of money to support the growth of a domestic supply chain, and to support the growth of domestic defence suppliers as exporters as well. So that, with us so closely located to two key defence installations, both at Amberley and at Oakey, I think that's a really big opportunity for our cargo business as businesses move into that space and need access to high volume, fast transport solutions to global markets.
Yeah, especially government investing in the space as well. So when we last spoke, you were explaining how the way to make a freight business work, it relies hugely on the smaller, high value products like, say, machinery or whatever, and then you take fruit, veggies, all that sort of stuff as well. You're very busy. Presumably this is the busiest time of the year, isn't it? What's happened with the mangoes?
It is the busiest time of the year, and we have freight turning up everywhere. We have enormous bookings on the freighter at the moment, which is fantastic, and a really great mix of business from major Australian beef exporters, some fantastic milk product, and a good balance of this oversized type business and mangoes, plenty of mangoes.
Manufacturers looking at you as well?
Yes, so terrific manufacturers. One client comes to mind, Simtech Creations, based at Nerang on the Gold Coast, and they make stunning visual display units which they're exporting all over the world. And because these things are quite big, they can't fit on a passenger aircraft, and they end up using our freighter service. So
well, you've got that, Cathay Pacific's got that huge 747, haven't they?
Yeah,
that's right.
That. And for businesses making very large and high value things like that, until we had this service in Toowoomba, if they were based in Queensland, their really only option for air freight was to road transport it to Sydney.
Right.
So we've got a fantastic opportunity to help them out.
Okay, so who are the airlines that operate out of the airport?
At the moment, we've got Cathay Pacific Cargo, we've got Qantas, Air North, and also Regional Express.
Yes.
A recent addition this year was a toll priority freighter operating domestically, which is quite a small addition to the business, but a really key strategic addition to the business. So we're very excited to be working with toll.
Yes, well, I was speaking to Michael Byrne last week, so he's very strategic about how he's operating at the moment.
Absolutely, that's a very promising opportunity for us.
Okay, unlimited slots, Sara. So that means, you're starting small. I mean, let's face it, you're starting small, but unlimited slots. So Is there interest from, I mean, you don't have Virgin there because Virgin presumably has got a lot going on in Brisbane, do they? Virgin
Well, I imagine they do, yes, absolutely.
All right, so, but what about interest from Chinese airlines, presumably?
Well, I've been to China a few times this year. We're very focused on trying to attract Chinese freighter or a freighter into the Middle East. So there's a few opportunities on the table at the moment. And yes, unlimited slots. You think about an airline trying to operate from one of the world's busiest airports like
Sydney,
Shanghai.
even Sydney, there's
I was going to say, or even Sydney, or Shanghai or Hong Kong. It advantages them if they can land their aircraft when it suits them. They get a slot time from the busy airport and they can land their aircraft when it suits them. And that's the case for us. So we can give them a lot of operational flexibility as well as a shorter flying time from the Northern Hemisphere into Australia.
So what is the potential to expand the airport if you needed to?
I don't think we're going to need to for quite some time. I think we've got a lot of development ability around the airport. And what's a key thing to be able to grow the business is access to developable land around the airport. That's something a lot of Australian airports don't have. We've got nearly 3 kilometres of Code C taxiway that we can lease and develop premises alongside. And we also have in excess of 2 kilometres of Code E/F taxiway for future development as well. So we've got a lot of scope. And
your runway as it is can land, as I said, land a jumbo, so it's international. Right, look, that's very interesting. So I haven't asked you about passengers. Are you getting passengers? A lot of passengers?
We do have passengers, we do have passengers.
Has it put Toowoomba on the map, or is it good for the folk in Toowoomba to take off and go?
Look, I really think it is, and probably about 3/4 of our passenger business is people who live in Toowoomba. And we did a survey recently of our passengers and how they felt about the airport, and they were incredibly pleased with the service that they're getting there. But one of the other things that came out of that survey and also some other market research we did earlier in the year is that our community is incredibly proud of our community. So that's why we've harnessed that pride in our brand from Toowoomba to the world, because this is a very proud community with a lot going for it that's now reaching out to a whole big world of opportunity, and the passenger business is key to facilitating that, as is cargo.
Well, obviously you must have been touched by the drought up there. That must have affected your freight.
Yeah, it did. It certainly affected the beef supply chain, and it does affect passengers as well.
I mean, that was beef was the space you were in, of course, earlier.
Yeah, that's right. That's my previous career was in the beef industry. So, but you see it on the people. Airports are quite emotionally vulnerable places, and people come to the airport. There's usually something happening in their life. It might be good or it might be bad, but you can see people change, and you can see stuff on their mind. So it's an intangible thing you get the feel of as you walk through a passenger terminal. Conversely, Christmas is fantastic, and you need to wear waterproof mascara as all the families greet each other at the gate. It's really quite touching watching.
So finally, you feel that this perhaps is the last few months of consolidation. How does next year look?
Well, I think we've had some good growth through the last 6 months in the passenger business in particular, and I think next year, like I said, having done the background work and having really got the business to a very healthy point right now, next year looks very exciting for us. We're ready to go and get some real runs on the board next year, so it's quite exciting.
Sara Hales, great to talk to you. Thanks for coming in and explaining a little bit more about Wellcamp. OK, after the break, Pottinger co-chair Nigel Lake tells us why Australia is a lucky country run mainly by second-rate people who share its luck.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, as we showed you earlier, Donald Trump had plenty to say to reporters before he boarded a plane this morning. Just a few days, he'll be meeting Chinese President Xi Jinping, and the world's holding its breath as to what's going to happen next. It has been an extraordinary year of geopolitics, with much of it impacting Australia. Nigel Lake is co-chairman at Pottinger in New York, and he joins me at the desk for a bit of perspective on this year, the last few years. Actually, Nigel, it's great to have you over here from you.
Great to be here, Ticky.
Well, look, actually, before we burrow into this, how do you see this negotiation of G20 and the standoff between Xi Jinping and Donald Trump?
The thing that I think is missed in a lot of the discussion is it's very asymmetric. I've been to China several times this year to see firsthand how the country is thinking about its engagement with the world, which is very long-term, very big picture, very focused on driving growth in the world as a whole, which of course benefits China, but will also benefit everybody else. And in that context, America is not a massive part of China's economy long term. If all American trade, if China lost all its exports to the US, that only takes about a few tenths of a percentage point a year off its growth for 5 or 6 years.
Is that right?
It's really...
So Donald Trump has it all to play for if he...
So there's much more at stake for Trump than there is for China.
All right. Well, look, yeah, this weekend I think it is. OK, let's go back to Australia, how we've gone, how you see Australia has gone. Because you're over there in New York as well as here, I know. How do you look at it when you compare us and, say, the United States?
It's fascinating. So I first moved to Australia in 2003 and was struck by the size of the economy, the prospects for growth, a lot of things which were overlooked overseas from here.
And we've had all this growth.
And it's come through.
Quarter after quarter after quarter.
Exactly. Amazing track record. And we went back and looked at the statistics. Since we opened the Pottinger business in August 2003, the Australian economy has grown about 120%, which is twice the rate of the US or the UK, 3 times the rate of Germany, which is quite spectacular.
Wow.
But as many people know, through that period, we've often felt that corporate Australia was missing out on some of the opportunities it could have realised. And so
it hasn't translated that growth in...
Well, it hasn't. I mean, I love data, so we went back and looked at what's happened. And have I just been the whinging Pom all along, and was it misplaced? And the reality is no. And the Australian stock market is up about 80% over that period of time.
Yes.
So it hasn't kept pace with the
since
economy as a whole
2003?
Since 2003.
Yeah.
The US market is up between 2 and 3 times, depending on which index you look at. Germany, the same.
What about earnings, corporate earnings?
So earnings, I don't have the earnings figures underneath. I've just focused on if you were a shareholder, if it was your super fund,
your
and you
returns
bought the shares,
on investment.
The profits don't matter as much as the share price.
No.
And so on that measure, the results have been terrible. There are some great stories.
Yes.
Some of the top companies.
So what's Australia been doing wrong in your view then?
Not looking outward enough, not looking for opportunities offshore enough, not saying that the status quo is dangerously comfortable and might lead us astray.
Yeah.
And the people that have done that, look at it the other way around, companies like CSL, amazing performer, now one of the largest listed companies here. Their share price has kept pace with Amazon over those 15 years, which is extraordinary.
Yeah, Boral's had a good run.
Yep.
Yeah.
So ASX, Cochlear, Flight Centre.
Well, and you guys, you yourselves, Pottinger's gone over.
Yeah. So we took our own medicine too. We've looked out and we went and spent some time tramping the streets in America trying to figure out what to do with that market. We've the 2 founders moved to the US a couple of years ago, and touch wood, it's been a fantastic journey. And I think very helpful then to bring that experience back to Australia and with the people we're working with here.
All right, so going back again to what actually can be done, where are the precedents here of companies that have done well?
So Peter Fitzsimmons had a piece in one of the newspapers this morning talking about Australia needs heroes. There are no modern day heroes in Australia, and I think his argument was a good one, but there are actually heroes here. We've got Sam Kerr and the Matildas, probably Australia's most successful sporting team of all time, playing one of the biggest sports. We have Atlassian, the co-founders of that business, one of the world's most successful B2B tech businesses of all time. Great success stories. Atlassian, if it was listed, would be about the 15th or 14th biggest company in Australia now. And all of that value has been created in the last 15 years. So we have people like that. There is another generation of entrepreneurs coming through, typically some in their 20s, but in their 30s,
is it stronger?
40s.
Because it was very patchy. We've got Canva, we've got Atlassian. Really, to get the unicorns are limited in Australia, but do you think now there's a deeper bed of...
There is a new generation of individuals who are the opposite of the lucky country quote. They are engaged in the world, they are interested, they are bringing their own ideas and doing things with them. And I'm personally really excited about where they're going. There will be a whole series of big success stories emerge over the next 5+ years. And all we really need to do is support them and cheer them on. If you're a big business, buy their services, buy their products.
Right, I was going to say, what is it? Because we've had Pitch at Palace here again this year for the second year, and that's a sort of look at smaller companies in a competition sense. Now we've had we've had the Dragon's Den, we've had all that sort of stuff down here as well, and we have these huge startup conferences where everyone gets frightfully excited. We've had, and you've been a part of that, having the venture capitalists come over here to meet the startups. Where is there the traction there now?
So there is. I mean, I'm particularly focused on B2B companies because they can be based here, so either customers or businesses. What they need is large Australian companies to buy their product. So we need,
and not buy them, buy their products.
Buy their product. You don't need to invest in the companies, just buy the products and services from those companies. We have companies like Quantium, one of the leading data science businesses really in the world in what they do.
Yes.
It's been running for 15 odd years.
Yes.
Great example of someone that can have transformative impact on their customers. But you need bolder leadership that says, actually there's a better way. Sticking with the status quo actually kills you in the end. There's some very famous companies who have discovered that. We need businesses that say, we're not just going to sit around and watch our share price drift down compared to the economy. Let's be a little bit bolder. We don't have to be crazy.
Do you think there are certain sectors that are better than others? I mean, I think the miners in Australia have been, I mean, they've had the money to do it, but they have looked at autonomous vehicles.
Absolutely. They've been very progressive. They've made big investments. They've been prepared to take risk. They have very global businesses. They operate all over the place, including in some pretty hairy parts of the world.
Yeah.
And they've done that well, and they are absolutely exemplars in their industries globally for performance. But they've been very outward looking. Many other sectors have not. And the comments you can make about the financial sector in Australia and the Royal Commission, all of that. Plenty of other parts of the Australian economy where performance has not been that exciting either.
Yeah.
If you're
well,
a shareholder.
retail has been pretty
Retail
difficult.
has been pretty tough,
Yeah.
Again, complacency. We reached out to a whole bunch of retailers about 2 years ago to say, Amazon is about to arrive. Are you ready?
Yes.
And most people said, yeah, we're going to be fine, thanks.
Yes.
And I just sit there thinking, you've got no idea.
Yeah. Well, certainly one person did. Jerry Harvey said we're going to be fine.
So we had a variety of people that thought they were going to be fine. The share prices tell a different story. Yeah. And until you realise that, if you sit in New York and you decide you want something, so I had dinner with a friend a few months ago and he quite liked the pen I was writing with. He said, can you get me one? So 30 seconds later I'd ordered it and it arrived the next day and he could take it home.
Yeah.
It's hard to beat that.
Yeah. What about the big multinationals that could, public or private, that could really drive Australia? Companies like Toll, the transport business, so that are looking. Again, I interviewed the CEO the other day, and it was fascinating to see the sort of disruption that might go there. For example, Uber might take some of his freight, but as he was saying, well, we've a huge amount of our stuff is defence and strategic and gas and chemicals, and you wouldn't want necessarily any old person doing that. But needless to say, that maybe the fashion side, that is nibbleable at.
So, I mean, the good example, and this is the benefit these companies have operating in Australia is this is a relatively large market in world terms. It's highly profitable. Despite all the pain the banks have got, they're still enormously profitable in world terms.
Yes.
So you do have a strong home market from which to build.
Yes.
You have to find a smart way to use that. And to do something more than just think we'll be fine just sitting here, because the she'll be right mate approach has not done well for shareholders.
So what are your plans next year with Pottinger?
So I think we have an exciting year ahead. We do more and more with the startup community.
Yes.
That's this year that's probably been 10% of our time. I think
is that connecting or getting funding?
It's a series of things. So partly it's really commercialisation. How do these businesses go from having got a few customers onshore to starting to get real traction in offshore markets, better traction with other Australian companies here, access capital. Currently onshore it's really hard, valuations are low, so trying to bring more capital from offshore and also trying to bring a different solution to that. So that's something that we've got that's sort of emerging. We've got some more news coming on that, we hope, in the next couple of months, but very exciting times.
Excellent. Nigel Lake, thank you very much for joining us.
A real pleasure, Ticky. Thank you.
Good on you. Right, after the break, Harvey Norman shares push higher today despite a slowdown in quarterly sales. Evan Lucas joins us to help make sense of it all, including the recent oil price. Right, back in a moment.
Woo!
Back to Ticky.
Welcome back. Well, let's finish the show with a bit on markets. We bring in Evan Lucas from InvestSMART from our Melbourne studio. Well, Evan, welcome there. We've had, of course, we've had Cyber Monday. We've had Black Friday sales. How has that impacted the market?
Yeah, well, if you look at it from the point of view of what the US markets did last night, it's clearly quite positive. Take away also the fact that last night, when we got the final figures about 3 p.m. our time today, is that Cyber Monday will be a record. It's the largest ever online sales in US history, and it ended up coming in around about $8.4 billion in one single day of turnover. Then you go hand in hand, as you alluded to Black Friday, so you get to include bricks and mortar and online sales for Black Friday on Friday, which actually saw just shy of $14 billion. So retail sales in the States are pretty strong, and you saw that going through into their retail numbers. So you look at the likes of Amazon, they really bounced up quite hard last night, but even those bricks and mortars, so they were up 1.2%, and therefore it fed into our market today, up 1% dead even, which is nice to see. We continue to find support at around about 5,600 points, so we just don't go below that, which is a positive thing to see after all the pullbacks and all the selling we've seen. It can.
Yeah, I was going to say, so obviously a great time of year to have it just ahead of Christmas as well. But how do these online growth numbers compare with, say, Harvey Norman's numbers?
Yeah, and that's, I think, the other telling thing that happened today is that Harvey's came out with some pretty terrible group of numbers. Yeah, at the AGM, you also saw quite a lot of commotion around, you know, the directors noted they're going backwards, and that shows you very clearly that bricks and mortar is struggling, and that is not something that's new from what happened with Harvey Norman today. This has been going on all year. We know about particularly the apparel side of retail that has been, you know, seeing bankruptcies, you know, left, right, and centre. It's now filtering into other areas, and Harvey's clearly are also struggling with the competition that's being created by JB Hi-Fi taking over the Good Guys in the last 18 months. All of that is seeing market share going away. So is
Kogan an issue as well?
Absolutely. Look, Kogan in itself hasn't seen the kind of growth that you would expect. Now, some would put that down to the fact that Kogan is a specific brand rather than actually being a retailer of brands, and maybe that can be part of his problem. But yes, there's no doubt he is stealing share. Amazon Australia is stealing share. And then not only that, if you look at things like appliances online, those kind of websites that have come from overseas into Australia are also infiltrating, you know, the bread and butter of Harvey Norman's and to some extent JB Hi-Fi quite readily. Margins in these kind of spaces, so that's white goods, software, electronics, they're razor thin. So it's a high turnover business, and if you can't get the turnover, you're not going to get the profit.
Yeah, well, really interesting. We've got Premier, obviously, AGM on Thursday. We've got Myer AGM on Friday. So that'll give us a really interesting sense of things as well.
Yes, go on. And Solomon Lew in the middle of that. That will be an astounding sort of couple of meetings to see what he actually says quite publicly.
Yeah, and where Jeff Wilson sits on Myer and where Anton Tagliaferro no doubt sits on Myer. Right, look, the other thing I really wanted to talk to you about was oil. The price seems to be, you know, declining, but can this really go on? What's your take on it?
Yeah, so that's a good question. So, I mean, I'm about to get delving back into sort of 101 economics in terms of how the best way to answer this question is. So if we look at what was going on all the way up to the October 5th top, there was a lot of discussion around two things. First of all was an impact to supply. So we had Iranian sanctions, we had Saudi Arabia actually looking at sort of cutting supply and making sure they could keep the price fairly elevated. Plus moving into, on the demand side, things like Christmas up in the Northern Hemisphere is winter. So there is always increased demand for heating oil. Plus demand in general was expected to be higher than it is. What has come out of that? We always concentrate on OPEC and talk about how much OPEC influences the oil price. That's fine, but OPEC makes up just on or just under a third of total supply. Non-OPEC actually is the one to watch here, and they are the ones that reacted to the price. They've reacted to the possibility of having this price discrepancy and seeing $100 a barrel, which is what we were staring at one point, and have increased supply dramatically. So if you look at the US, you look at Canada, you look at Russia, their level of supply went through the roof over the last couple of months. It's therefore seen stockpiling go through the roof, and so now all of a sudden you've got an oversupplied market. Coupled with that, the sanctions on Iran weren't as hard as expected, so their supply hasn't been impacted. And then the other part of it is demand just didn't materialise like expected. We're currently, the globe that is, putting into the market over 300,000 barrels of oil a day over what is required. So
yeah, so you see this going on for some time.
It's more around what normally happens, and the best way to gauge this is actually the EIA data, which shows the amount of rig count in the states. It tracks it almost sort of the price to the rig count almost perfectly, trailing about 2 weeks. So what you'll probably start to see is that rig counts in the states fall off because of this price. So it will soak up some of the supply, it will put a floor, but it also means that it caps price out. It means you probably can't see WTI going past sort of 75 US a barrel. Plus you've got a president who also doesn't want it to get to that kind of price.
No.
So all of those factors feed into. I know it's a bit long-winded, but it does mean that oil is range-bound now, and it clearly, despite all the risk that we saw around political issues with the horrible events in Turkey around Joggi and his issue with Saudi Arabia, all that kind of problem gets back to 101 economics, supply and demand, and the oil markets at the moment are oversupplied.
Not long-winded, it's absolutely fascinating. Now, let me ask you about the US Fed, though, because the market, you know, has been talking now as to whether the Fed might be not going to drive on with its interest rates rising next year. Where do you see its thinking?
Yeah, and the word you use there is the word might, and I deliberately point that out. We are still looking at a US economy that is moving at quite a rapid rate. It hasn't changed so dramatically in 7.5 weeks since we hit a record all-time high on September 28 in the States to where we are now. So if you look at employment, you look at inflation, you look at wage data in the States, it's all pretty rosy.
Yes.
It's very hard to see that this is going to be enough information that markets moving the way they have will back them off. Now, we do hear from Jerome Powell tomorrow night. We hear from Vice Chair Sara tonight in New York. And maybe they'll allude to the fact that instead of 3 rate rises in 2019, they expect 2. That's what the market thinks. But as I said, there isn't anything significant when they're data dependent to walk away from that current trajectory. The reason I want to highlight it is that from an Australian-centric point of view, we have obviously a situation where we are short on the amount of money that we have to borrow in this country for the lending that we require, and 1/3 of our borrowing therefore comes from overseas, and around about 65% of that comes from the States. So if you see increased interest rates in the US, you're going to therefore see increased costs to the borrowings that we have in this country, which therefore means that banks will filter that through to whatever loan you have, home loan, personal investor, etc., business. And that is why you do have to watch what happens going on Constitution Avenue over in Washington, because it will impact us in a forward basis over the next 12, 18 and 24 months as we see the cost of capital increase as the US increases interest rates.
And they've got the Royal Commission as well to deal with those banks. Evan, Lucas, thank you so much for all of that.
Thank you, Ticky.
Now let's go to Britain. Theresa May has begun the difficult task of convincing MPs to vote for that Brexit deal. She's done approved now by the European Union leaders. The first to hear the British Prime Minister's pitch was her cabinet that reportedly congratulated her on securing a deal with the EU. Mrs May has now faced MPs in the House of Commons, where she returned to the issue of immigration in asserting the Brexit deal is the right one for her country.
Mr Speaker, this is the right deal for Britain because it delivers on the democratic decision of the British people. It takes back control of our borders, it ends the free movement of people in full once and for all, allowing the government to introduce a new skills-based immigration system. It takes back control of our laws, it ends the jurisdiction of the European Court of Justice in the UK, and means instead our laws being made in our parliaments, enforced by our courts.
But the opposition, UK Labour leader Jeremy Corbyn, has maintained the deal does not have the support of either side of politics or Britain as a whole. The deal will be voted on in Parliament on the 11th of December. Now, meantime, the US President Donald Trump is actually telling reporters outside the White House the Brexit deal may hinder trade between Washington and London.
Sounds like a great deal for the EU, and I think we have to do this. I think we have to take a look at seriously whether or not the UK is allowed to trade, because, you know, right now, if you look at the deal, they may not be able to trade with us, and that wouldn't be a good thing. I don't think they meant that. I don't think that the Prime Minister meant that, and hopefully she'll be able to do something about that. But right now, as the deal stands, they may not be able to trade with the US.
That's all for the show tonight. You can catch the show again at 10 o'clock tonight on free-to-air Channel 95 or on Channel 601 on Foxtel. Tomorrow night, BAE Chairman Sir Roger Carr. Thanks for your company.